Now to talk about a few of the key themes in the portfolio that we're taking advantage of at the moment. The first one is the tourism boom we're experiencing here in Australia. Really been stimulated by one key thing, that's the fall in the Australian dollar, which has fallen from $1.10 at its high, got all the way back down to 69 cents. It's since recovered into the mid-70s. That's really fueled the return of tourism for the first time in almost a decade back into Australia. So we're seeing a large amount of Chinese tourists in particular come into Australia for the first time in a decade. Influx of tourists from America on the dollar translation, clearly that benefits this particular sector, and it's forecast to continue to grow, as we say there on the slide, as long as that Australian dollar stays low. The Queensland economy will clearly be a benefit of this, given it's a great destination, particularly for Southeast Asian residents who like to come down and see whether it's a barrier reef or come and visit the theme parks, of which we talk about there. Ardent Leisure is one of our holdings in the portfolio, taking advantage of this particular thematic at the moment. And Ardent Leisure not only own some key theme parks on the Gold Coast, but they've got a rapidly growing leisure business in the US called Main Event, which has been a really big driver of the overall group's earnings in the last 3 to 5 years in particular, and we believe that can continue as we go forward from here. But certainly, and Skydive the Beach is another small holding that we've got in the portfolio. As the name suggests, they're a skydiving outfit. They run skydive programs, so for anyone who's interested in a free skydive, let us know. I have done one and I'll never do it again. But certainly that's another one that's plugged into this tourism boom, in the sense that you've got a lot of, particularly the younger generation, the Millennials, which we'll talk about shortly, which love to come and visit Australia, and they've got operations up in Byron Bay, Wollongong, so they're really well plugged in to take advantage of that tourism boom as well. We have held other stocks in the portfolio to take advantage of this tourism theme. They have reached our price targets and since exited the portfolio, and one example of that is Mantra, which was a great performer for us, probably one of our best performing stocks over the last 12 months. We've since exited that position as it hit our price target, but certainly we think both Ardent and Skydive the Beach represent better value for us at this point in time. The battle between the Millennials and the baby boomers. So the Millennials are the new generation coming through, in their teenagers or in their early 20s. What the Millennials are big on are experiences. They love to go out and rather spend money on material items. They like to spend money on experiences, whether it's going to the movies, going on an expensive holiday. I read an article the other day talking about how some kids in their early 20s now will, in terms of going on holidays, they're willing to spend more money on accommodation and stay at 4- and 5-star resorts, as opposed to some of the hostels that maybe you and I stayed at when we were at that age. They part with their cash on these experiences, on these holidays. Amalgamated Holdings is one that we've held in the portfolio. We've since sold out as well. They're plugged in well into this theme, where they've got a large cinema business, and as well as being an owner of a lot of hotels here in Australia. Again, that one just reached our price target over the last 6 months, so that one has since exited the portfolio. And when you compare that to the baby boomers, who are very much more thrifty in terms of looking to spend money on healthcare in particular, and also travel to a lesser extent. And certainly one stock that we've got in the portfolio which is taking advantage of this particular thematic at the moment is Webjet. And Webjet are a comparison site where you can purchase your airfare or accommodation, or even book a full holiday on that website. And we think that that's certainly one company that's certainly positioned well over the next few years to take advantage of this particular thematic. Continued Chinese demand. This has been a really topical one. We had a lot of questions from shareholders on this. Over the last 12 months, we've seen a huge increase in interest in ASX-listed stocks that are plugged into this Chinese growth thematic. Particular A2, Milk, Bellamy's, Blackmores, and A2 and Blackmores were two of our best performing stocks over the last 12 months. What we've seen there is a grey market appear, where people are buying vitamins or baby formula in bulk in Australia and sending it off into China, and generally selling it at 1 to 2 or even 3 times the ticket price that you and I would pay for that here in Australia. We've seen the share prices of those companies re-rate quite strongly, and Matt will talk to you a little bit more detail about A2 shortly. But we've since exited those positions in A2 and Blackmores. We are concerned about the regulatory environment over there in China. We have seen some news just in the last few days from the authorities in China potentially restricting some of the Australian companies selling into China, so that we think that It's very, very hard for us to predict what they could be, those regulatory outcomes, but the key thing for us is they present an overhang on the share price, as they call it, or an uncertainty as terms of where the share price could head from here. And they've had phenomenal runs. The share price of Blackmore's moved from $30 to over $200 in the space of a year. A2 went from 40 cents. It got to $2.30 at one point. So they've had incredible runs, these companies. We think that this demand for Chinese products is not going away, but it's going to be tapered down in the sense that the grey market that we've seen in Australia over the last year in particular will slow down. It will still be there, but it will slow. And one company that we've got in the portfolio that we quite like is BWX, which is predominantly a seller of skincare. Their major brand is called Sukin, which you may have heard of. They are a company that's growing rapidly at 30 to 40% from here on a PE of 19. We think it's positioned quite well. And they've just been, they're about to enter into that Chinese market. And if you look at the Chinese market, in terms of what sector has the largest demand for it, or what products have the largest demand out of China, it's skincare. And so skincare is certainly one that the Chinese consumer does value quite highly, and is very, very keen to get access to offshore brands that they can't get directly on the shelves in those Chinese markets.